as the war drags on, we can see a direct impact on the stock market. So in today's video, we are going back to take a look at how the week performed for all the three indexes along with what the volatility is showing us. We'll look at some of the companies that have pulled out of Russia. We'll take a look at China's GDP numbers. We will look at what the earnings that are coming out. And finally, my thoughts on how Q1 is shaping up and how it will impact down the road. So if you enjoyed today's video, leave that like. And without further ado, let's dive in. Alright, let's get straight into the numbers. S&P 500 started the week at 43.49, ended the week at 43.12. It's down 0.47%. This is the third week that S&P has closed in loss. Nasdaq was no different. It started the week at 13,658, ended the week at 13,313. It's down 2.53%. The same fate as S&P 500. Dow also closed the third straight week in loss. Started the week at 33,644, ended the week at 33,606, down 0.09%. As the war drags on, we see a major impact on the oil, metal, all these other commodities that the United States oil ETF jumped up 17.84% in the last 5 days. If you follow this channel, you know that we follow Vale and it is part of our public portfolio, and Vale itself also jumped up 12.51%. Vale is expected to benefit from this war because the Western countries, they refuse the export of Russian minerals, which is benefiting this Latin American company because the institutional capital is flowing towards the Latin America and they are going to become the exporter of a lot of mineral products. VIX has gone up 0.22%, and as the volatility goes up, the stock market goes down. Bitcoin, on the other hand, dropped 11.88%. The crypto market has also been hit the hardest because of the Russia-Ukraine war. Now, Ukraine, if you know, is one of the most important countries when it comes to the crypto mining, and crypto was supposed to launch Ukraine into the future. Because of this war, Ukraine is receiving aid via cryptocurrencies such as Bitcoin, Ether, Dogecoin, Polka, etc. This was never the plan for Ukraine. Ukraine wanted to become the most crypto-friendly country in the world. Now, instead of that, Ukraine is busy looking for ways to use its knowledge in crypto and digital asset to support the war effort. Last week, we saw BP divesting from the Russia, as well as we also had Shell divest out. We heard from General Motors, Volvo and Volkswagen, they stopped selling cars in Russia. Apple stopped selling iPhones and other products, limited access to Apple Pay and the banned Russian propaganda apps. Nike and IKEA, they closed their doors. Disney and Warner Media paused the release of new movies. Norway's $1 trillion Norwegian fund said they would divest shares of 47 Russian companies and Russian government bonds, and the list goes on. And here is the list which you can take a look at in which companies have divested out or moved out of Russia or put a ban on. You can see every single day there are more and more companies that are stopping their relationship with Russia because of this war. Moving on to the next important topic, which concerns the second largest economy of the world, and yes, that is China. So China had its annual parliamentary meeting, which happened yesterday on Saturday, and they discussed economic growth and other topics. And the 2022 GDP target of China is 5.2%, which of course is lowest in the 3 decades. IMF expected it to be about 4.8%. The general consensus was about 5%. So it is still higher than what was expected. But from China's standpoint, because it's a growing economy, it is the lowest among the 3 decades. Some other indicators have not changed. The inflation target remains to be about 3%. The urban jobs creation would remain at about 11 million. The fiscal deficit of China has actually reduced from 3.2% to 2.8%. Very important. And lastly, China has decided to increase its annual spending on its military by 7.1%, which is only second to the US, which would be about $230 billion they will be spending on their military this year. Staying on the topic of China, the SEC, Gary Gensler, on Friday mentioned that approximately 250 Chinese companies can be delisted by as early as 2024. He goes ahead and says that we have had some good discussions with our counterpart from China, but it's really up to the officials in China. If China changes tack, he says, then there's a path forward. But otherwise, Congress has spoken about 250 Chinese companies would have to suspend trading here potentially as early as 2024. So I know there's a lot of retail investors that invest in Chinese companies such as Alibaba, Tencent, Baidu, etc. Would this change your perception of investing in Chinese companies, or do you see this as an opportunity? Because this news is definitely going to bring down stock price for a lot of companies. What are your thoughts? Let me know in the comments below. Alright, moving on to the earnings. We still have a lot of companies reporting earnings this week, but it is getting less and less exciting because most of the major companies have reported the earnings. So on Wednesday, OTLY reports earnings before market opens. I will be keeping a very close eye on this, especially I want to know how they are ramping up with the production. The demand is not a problem for this company. Moving on to Thursday, the three companies that are on my list. Number one is Blink Charging, BLNK. If you follow this segment from last couple of weeks, that we have been tracking Blink, which has a short interest of 41.9%, and the short percentage again increased 2% last week, which clearly goes to show that the short sellers are expecting the Blink stock to fall down further. So if the earnings come out less than what is expected and the future guidance is weak, we could see a major downturn in the Blink stock price. The next company would be DOCU after market close as well. If you don't remember what happened to DocuSign, check it out right over here. The Q3 earnings, when they reported, it had a big dip. So it will be again interesting to see how they have coped up in the last quarter. Have they made any changes or improvements? So a lot of people will be keeping a very close eye on this company. And lastly, RIVN, another major player in the electric vehicle space. So we will be keeping an eye on this company as well. Moving on, what to watch for next week? Well, first of all, the biggest highlight for the next week will still remain the Russia-Ukraine war. We will continue to keep eye on both the commodities and the indexes and see how they perform. But apart from that, there are some catalysts that could push specific stock prices up or down. One of the catalysts that we will be keeping a close eye on will be Apple's peak performance event that happens on March 8th. Apple is going to be holding a virtual event on Tuesday, March 8th at 10 a.m. Pacific time, and this event is taglined Peak Performance and will be streamed on apple.com. So definitely check it out if you're an Apple fan, and even if not, there's definitely some interesting information that would come out. So we could see some interesting product lineups that could be announced. We could see an iPhone SE 5G. We can also see more information on iPad Air. We can also expect a Mac Mini coming out. And then there are a lot of analysts that are expecting that Apple is going to make some kind of an announcement on their VR headset. The electric car company NIO will start trading in Hong Kong next week. So my thoughts. Number one, let's get into the screen here. So what am I doing next week onwards? Well, I will be keeping a very close eye on the S&P 500 because this particular channel that we have, the upper end is the 431 range and the lower end is about 418. We have not seen S&P 500 trading in this channel back to June of 2021. Since S&P has crossed the 430 mark, what we have noticed is that 430 has become a very crucial support area for S&P 500. It has touched this 430 area many times and it has bounced back. The same can be said right around here in the January time frame, but in the February we have started seeing that S&P, this support has been breaking down more and more often. It even went down to 410 but quickly went back up to this 418 area. This is the channel which I expect the S&P to continue to trade on throughout the next week, and I plan to nibble away little bit of shares at this point in time. One of the reasons I'm being very careful here because the RSI continues to trend downwards and the volume has been declining recently for the S&P 500. Now, my second concern is as the war drags out, all these companies that are stopping their business relations with Russia, there is going to be an impact on their revenue. So as they sell less products and services because of this Russia-Ukraine war, which also means that the oil and other commodity prices are increasing, the manufacturing and transportation costs of producing the goods are going to become higher. So your revenue goes down, your cost of producing goods goes up, which is going to impact your gross profit. So we could see a major impact of the revenue as well as the earning per share for a lot of companies in the Q1 of 2022. So I am very concerned with the fact that in Q2 earnings that are going to come out in the next 2 months or so, we could see a major impact on the stock prices. So that's the reason why I'm keeping a very close eye on the S&P 500 as well as the Nasdaq, and I'm going to nibble away rather than dumping all my money right now because we could see a further downturn. March 16 is when we can expect the Federal Reserve to increase the interest rate by 0.25%. And with all these catalysts like the Russian war, increase in the oil prices, interest rate hike, we could potentially see an ugly summer. So let me know in the comments what are your thoughts about the recent turn of events in the world. And if you enjoyed today's video, don't forget to hit the like, click on subscribe and ring the bell notification. I will see you next time on Investor Family, but don't forget to invest for tomorrow.